Okay. Good morning, everyone. Thank you very much as you're tuning in, and if you're watching the replay, thank you. This is the market analysis for October 23rd. We're going to start off with gold. I have all of the markets are red right now since the open of the markets at 3:30 yesterday afternoon Mountain Time. We'll be going through this fairly quickly because I want to focus on the comparison between 1929 and today. The charts before 1929 were awesome. Before the stock market crash, they were great. I'm not going to show too many, but this one in particular is the Dow Jones. The Dow Jones International. Now, this is
I
our
can't see your chart.
industrial average. Oh, share my screen. There we go. So this is the Dow Jones International. I'm gonna zoom out to the weekly chart so that you can see it in comparison to what else has happened over the last 4 years or so. Now let's just get rid of this here. Yeah, let's just hide that. Okay. So as you can see, just constant growth, just a constant growth. And then here's what happened in beginning of 2020, February 2020, when everybody got scared because COVID was something, and the stock markets crashed, and then it continued going up. Had a little bit of a retrace here. That's pretty normal. We see that kind of thing happen lots. And then over the last little while, it's just continued its climb upwards. Now, this here, and if you take a look at the news coming from the Federal Reserve, coming from the institutions that take care of all of our banking, they're saying everything's fine. But we know that something's not right, because the market has been contracting this whole time. The price doesn't reflect that. The price doesn't reflect that. But the market has been contracting. You take a look at the data that comes out, and if you want to have some really good sources of data, you want to follow Ethical Skeptic on X, and Edward Dowd, D-O-W-D. If you want to see the data of what's actually happening to the markets, if you want to actually see the raw data to what the predicament is, you're going to be floored. Don't take large doses of either of those sources, because you will get depressed very, very quickly. So why doesn't the chart reflect that? Well, it's because the charts are a reflection of the value of the currency, not of the asset. They're supposed to be a reflection of the value of the asset, but they're not. This is a reflection of whatever they're telling us the currency is worth. So all they had to do to make it look like things were good was print a lot of money so that the price of things would go up. This is why you never trust anything they do, because they are the most artful thieves. So back to the Dow Jones. This is a Dow Jones chart from January 1915. So 100 years ago, there was this big dip at the 20s. This was, war was over, everything was terrible, economy was awful, and they were like, we got to get some money in here. And so what they did was that they started this Ponzi scheme of printing money. And it's easy to do. All you got to do is get a Federal Reserve to offer a government out of a private capacity. That's what the Federal Reserve is, by the way. It's not a government institution. It's a private business. It's a private company. That private company offered monopoly money to the states to recover from the war. That was also easy because the bad guys won World War I. And then they won World War II as well. But that's beside the point. Here, you can just see it just climbing and climbing and climbing. And then here towards the end, it's all like parabolic. It just, whoo, just jumps up really fast. And then it drops. And when it drops, it takes the wealth of all of the people with it. It dropped from, get this, 63.36. Now this is adjusted for inflation. So 63.36 down to 9.93. It went lower than the support it built from 1920. It took them almost 10 years to do this. Well, I want to share with you some numbers. Here, this is what? This is January 20, so let's start here. Right here, December 2019 is when the Federal Reserve started putting $1 trillion a month on the balance sheet. $1 trillion a month. And since that time, it's been going up. Oh, and I forgot. I'm on a logarithmic scale. So I'm going to go to regular so that people can see the scale of this. So here we have this great big growth. Oh, yeah. There's a bunch of growth that happened right after the injection. Yep, there's all the growth that so this dip happened because of COVID. They needed that. They needed that. But then look at all this growth that happened during COVID while the stats, the data coming out, even by 2022, we had already started to see excess mortality, excess, what do they call it? In the markets, there's a term for it, where people are just not showing up for work. Disability, sick days, all those things. All of that contributes to loss of economic activity. And yet it went up. There's a little bit of a retracement. That's normal. That's happened lots in the past. You know, we've had it happen where it just retraces, right? It's going up and then it retraces. That happens. But this one here, that was significant. This drop here, what is this? It's like 20% or something, I think. 35% drop, 38% drop in the markets there in that month. This retracement, normal. But then look at how exponential this goes. December, October 2023, when the economy's at its worst, literally, it's just getting worse and worse and worse. How is it that the price can go up? It's because they make it look like it's expensive. And the reason they do this is because they need the people's wealth. And so the portfolios get invested. Whenever these charts happen, all of the technical analysts, they're going to look at it and be like, look, the price just keeps going up. It keeps going up. But they're not taking into account the fact that this is all odious debt that the government created out of thin air to make you believe the markets look great. Look at how healthy the economy is. Over $43,000 on the Dow Jones. Adjusted for inflation, it was only 6,900 back in 1929. So look at how much better everything is. Well, it was during this time here, February, March of 1929, there was a gentleman who worked on Wall Street. I gotta look up these names and stuff and have it a little bit more ready. But there was a gentleman who was working on Wall Street and got his shoes shined. And the 12-year-old boy that was shining his shoes was naming off different stocks that were doing really well. And he got up from his shoe shine and told the young boy, don't buy any of those stocks. And he was marveling at the fact that this 12-year-old boy was proficient in naming off stocks that were doing really well. It was in that moment that he knew that the crash was coming. And he went and sold everything and saved his wealth. You know it's time to sell when everybody's talking about how awesome it is. That's how you know. And so what we're watching for, the marker that we're watching for right now, is when are people going to say, not this market here. I actually think that the fallacies of the mainstream have gotten so severe that not enough people are believing in this nonsense. The big institutions, they're just playing it out. And they definitely still have a large retail trading, like people like me, the normal everyday Joe that wants to go and trade retail. They've got lots of people in there. But I think the vast majority of people are really starting to, well, they know none of it's real. The vast majority, or they at least know something's wrong. And so what we're watching now is this mass migration from these and that's what these are, time-backed commodities into data-backed commodities like Ethereum, Bitcoin, Modic, Solana, XRP. Like, these are all data-backed commodities. That's all they are. They're not time-backed. And so we're watching the time-backed commodities, these ones that have parabolic charts going up saying that everything is fine. These time-backed commodities are being switched. They're being traded out. They're literally, the institutions, banking, governmental, BlackRocks, Vanguards, all of those guys, they are all on board with this. This going and deceiving people into thinking that this is good, and then they're going to pull out that rug, and we're going to see this. And again, lower than the support they built. The support that they had after they started doing that $1 trillion, the support was 18,000. The low. What was the low here? I gotta zoom in a little bit here. Find that bar. There it is. Low 18,174. 18,174. Well, it's at over 42,000 right now. Well, it's going to go lower than the support they built. So when this crash, if it were to crash today, that would be a 57% drop. 57% drop. And all of this will occur likely within a period of 6 months. Why? Because last time, it took a long time. Last time, all of this dropped, like this took a couple of years. Yeah, June 1932 was the low. This took a while. The reason why was because there was no other system. This, they've got a new system. They got a whole new infrastructure, a whole new financial infrastructure to onboard people. So this is going to be the marker where everybody freaks out. This isn't going to be, not everyone's going to be talking about buying the next best stock. They're not going to be, they're going to talk about Tesla and Nvidia, because Nvidia now is looking like it's something like $80 billion short or no, 80 million, I can't remember. There's an amount, I think it's $80 billion short of surpassing Apple as the largest corporation in the world. I don't know how they figure that when there are BlackRocks and Vanguards on the table, but whatever. So Nvidia is one of the biggest ones. People are talking about it, but it's not going to crash because it's a data-backed asset. In fact, Nvidia, oh my God, we're just going right off the rails here. Nvidia was really smart. They were like, oh yeah, let's make computing chips for AI and sell those like hotcakes. And they are, but that's not where they're making the money. They're treating that like a burger. You know, McDonald's doesn't make as much money off of the burger as they do the sparkling sugar water and what do they call those things? The French fries? They're the representation of potato. That's where they make the money. So Nvidia is not making money off of the AI. Nvidia is making money off of the cloud storage that people are going to need as they run their AIs. That's how Nvidia is making their money. They're not even really caring so much. Like, yeah, they make some great AI chips, no question. But the money that they're making is in storage. So this entire time-backed, this is all backed by the commodity of time. All of it is collapsing because now we have a machine that can do all of our work for us. We can save all that time. This crash is going to be so significant, they are going to use it to get people to onboard into blockchain, the new financial infrastructure that they've been building for the last 20 years, arguably 30. So, questions, queries, comments about this? Anything you want to know about what we're seeing here? Anything? Oh, I know what I was going to say. The marker that we're looking for is going to be when people are screaming about AI, about all the data-backed commodities. That's when we sell out and we change all of that money that we're making on these massive growths. So let's take a look at Modic, for example. Look at this growth, 679%. That's expected, just to get us back to the all-time high. XRP expected to be at $1, almost $2 by spring. FAR, this one here, all-time high. Gaming coin, massive. There's huge money in this. It doesn't look like that because the chart's so low down here. But this is the starting potential growth, 2,300%. This is where everybody is going to come. And when they come here, we're going to see all this growth explode out of nowhere. And it's going to be inflated pricing, right? Because we're going through inflation. So this is just going to look insane and everyone's going to be talking about it. It's going to be common. You're going to go and get your hair done and your hairdresser, who doesn't know anything from anything about AI, is going to be talking about how her and her husband have sunk in, like they remortgaged their house so they could get some AI stock. That's when you know it's time to sell. That's the kind of conversations you're going to hear in the street, and that's how you know it's time to get out. Because when this crashes, it's going to wipe out the wealth again. This is a two-stage process. They're going to wipe out the wealth of the people like this first. So we're going to see that US chart, especially this US 30 chart, Dow Jones index is going to drop like a rock to below 2020 levels. And it's going to happen very quickly. And it's while that's dropping, we're going to be making all that money because we're already on board with the new financial system. Well, not on board with it, but we already have some money in there so that we can make some of the most degenerate cash you can possibly make. which is taking money from all the stupid people and putting it in your pocket. It's okay. You can feel good about it. I mean, it really is survival of the fittest when you take a look at history. And natural law even indicates that the lesser minds are not going to make it. It's just the way it is. And so use their money so that way that money doesn't go. The reason you're doing this, the reason you're pulling this heist off is so that the elites don't get that money and you have some. That's why we're doing this. So as that's falling, everyone's going to be screaming and crying because, oh, my investments are going down. Oh, my retirement is toast. You know, I lost 60% in my retirement. Everyone's going to be whining and crying. There's got to be a solution. And then once it gets down to the closer to the bottom here, under 25,000, that's when the government will kick in and be like, oh, look at we found. Look at what we found. We found this amazing opportunity where we can move our assets into Bitcoin or Ethereum. Yep. Just found it, eh? You know, sign up for your XRP account now so that you can exchange all of your $40,000 worth of terrible credits, and now you just need to pay it off with 40 of these ones. People are going to get all excited and they're going to fall for it, and they're going to be enslaved into another. They're going to be further enslaved into another system, a whole different system that is backed by data, not by time, by data. That's what this wealth transfer is. I keep talking about the wealth transfer, and people think I'm talking about from, you know, the rich to the poor, or from the poor to the rich. No, I'm not talking about that wealth transfer at all. I'm talking about the transfer of wealth that goes from time-backed commodities to data-backed commodities. And that's what we're at the base of right now. What, I did 4 charts and that's it? No, let's go on. Gold and silver. 2 charts I did. We didn't even do gold and silver. Silver, we were talking about it earlier before I forgot to hit the record button. So big pullback from a new high formed at the 34.8 level, and it's been pulled back quite a bit actually today. Not as much as it went up on the 18th. Holy cow! So this retracement likely. We'll see a retracement, a healthy retracement down to the 32.6, 32.5 level before we head up to the target that I have right now. The next resistance that I think we're going to see is at the $35 level, which we already saw, you know, the beginnings of that at the 34.8. Gold formed new high again. It's been forming new highs. What do we say? It was every day since, right here. It's been going up every day. Bullish movements every day, forming new highs ever since let's grab it from this day here. How come I can't get my ruler? There it is. Every day for 13 days. 9 bars, 9 days of trading, and every day it just keeps on going up. So this little retracement that we're experiencing today, pretty insignificant in the big scheme of things, but it would be pretty good. I mean, that all-time high now it went over the 2750, and I figured this was going to produce some resistance. And so, we'll see what happens over today, tomorrow. If there is resistance, I think that it'll come back down to the 2670 level as it retests this high here. And we're in uncharted territory though, folks. So I'm really can only go based off of what I see here over the last, few months. Really. It'd be nice to look back in history and be like, hey, what did the price of gold do last time it was at $3,000 US? No, that doesn't happen anymore. We're way past that conversation. Japanese markets, they are not holding that support, are they? Yeah. It's like I look at this chart and I think of the old conversations that old people have if they a sore hip or something like that, and you're on the street and this right here is them falling, right, where it's like oh no, and then it happens slowly. You can tell it's going to happen, and it happens slowly because they're old and they move slow. And then after they bounce off of the ground, this is a terrible analogy. then they then they sit there and they reach out and they're like, "Help! I've fallen." And then they take a kind of a this part here, this little dip here that happened on the 5th of 6th, the 6th of September. It's like, oh, you can see they're exhausted. And then they reach up again and they feebly say, "I've fallen and I can't get up." And they're collapsing again. So if nobody gets up and helps this old person off the street, which nobody was able to help these old geriatrics very much, this is not going to end well. We're going to see, again, same thing, lower than the support they made in 2020, which is 16,000. So yeah, like it peaked out. It did a great job showing us that it's capable of being valued at 42,498. But watch out, because that bottom is going to hurt. $16,000. On to the good news, because this is where we're making money right now. Got two positions on NPC. First one I grabbed was July 3rd. It's been moving along quite nicely ever since then. And then another position that I took on September 7th. Between the two of them, I do expect to make about 200%, 250% on the second trade. Sundog, same kind of idea here. Been holding out for a little while. It's I shouldn't say same kind of idea. It's the same. It's another meme coin, but that the price here is actually really starting to show some big tests on the support level here at 20 cents. I'm not too concerned about it. Again, if it goes down, probably buy some more. If it collapses, I'll quickly change it out. Yeah, and we'll know more here over the next couple of days. But I can trade this out and move it over to something else. Bonk is still consolidating within its wedge right now. I would say that we still have enough time, depending on how things go here over the next week. Wow, it's already Wednesday. So yeah, it might be next week where it retests the trend line down the bottom before we head up. The other it could go down too. Who knows? Doesn't really matter to me because I didn't put very much in this. This was just a fascinating little $100 I'm testing out. Woo! Now we get into some serious stuff. This is where the serious money is going to be made. Long term, and I say long term in cryptos. That means about 6 months. This is going to be really good for the pocketbooks. Woo! Social trading platform that has been, oh yeah, it's just it did a great starting run where all of the big investors at the beginning, they were selling off to the people that were, or rather all the panicking people were selling off their assets to the founders and early adopters. Had a nice little run here in 2024, beginning of 2024, as we were noticing more money coming into the ecosystem because of the ETFs that were being sold off of Bitcoin and Ethereum. And then, beautifully retesting this low range here at 11 cents. And when did I come in? Yeah, September 26th is the first purchase that I made at 18 cents. It is the all-time high is set for 87, and the general consensus within the community is that this thing should be valued at about $1. And so I've set my target for $1, and that would be a 352% growth. Again, I'm just catching that bubble, right? I'm not here to play this for years. I'm here to make a whole bunch of cash and get out, so that people who are experiencing the bubble can go ahead and they can go ahead and experience that. That'd be all right. I don't mind. It's going to be catastrophic for a lot of people, but I've been talking about this day that we're going through since 2011. So if you don't know, you don't know. But if you know, you know, and you do the right thing. ARK. Oh yeah, I'm buying ARK today. Look at this. Look at this. This retracement is coming down This high here signifies that we've got that potential for growth. We've got tons of accumulation here in around this 2-cent level. Right now we're at 1.8 cents, so below 2 cents. I said that was my trade plan. So I've got a position that I opened up on the 24th of September. So I'm down right now 40% on this particular trade. There's a second trade that I took on October 12th that is also down 16%. So what do you do? What do you do when it's down like this? Well, I know where we are in the trend. I know where we are in this whole revolution. And so what am I going to do? I'm going to add. I'm going to add to my position. Why? Because that way the average cost that the average cost to me is lowered. Average cost per coin will go down every single time I buy more. And so the amount that I have here, I don't know what it is, but whatever it is, I'm probably going to add another position, probably 50% larger. And the reason for that is because as it goes down, the lower price that I get, I'm able to compound that growth a lot better. In fact, if I do it right and I get another position here, say I add 150% to what I already have. So I already have 2 positions. I'm going to be adding that again plus 50%. So I'm going to be adding quite a bit. And the reason why is because when the price comes back up, that first trade profiting 36%, because it's a larger amount, this growth here, oh, let's move it over. This growth here, between this point to here, which is where I entered back over there, bringing back to that price is a 68% growth from here. 68%. So the amount that I put in here is going to more than profit and I'll be super happy about that, even though we call this here, we call this the cost of, this is the cost of lost opportunity. So I want to recoup those costs. So I add to my position and I'll ride it back to there and then beyond, because I got way more to go, right? That ruler, you know, shows 100% from here to this high here. 100%. Is that right? Yeah. Look at that, 102%. To here, it's 728. And again, we are headed into the onboarding phase from the time-backed assets into the data-backed assets. Things have been crazy over the last 4 years. We can all agree. In fact, crypto saw its own storms with corrupt exchanges and all that stuff. But the onboarding is now. This is the time. And so this is just super, super encouraging. I'm going to bookmark this one and we're going to come back to that and buy some. Tau. BitTensor. This is a huge infrastructure project for AI, providing liquidity and resources for big tech companies. So that's why this one here is at 531. It did have this low here at 168, so that would have been a nice one. You know, I didn't really know much about it when I first got, I didn't really know much about it. And so when I first started doing these market analysis every day, and so, but look at this, like this M pattern here with a brand new high, super encouraging. We're seeing some retracement coming down here from this high at 680, now down to 531. Likely we'll expect, you know, if it stays down here for another day or two, we'll likely see another retracement to test the 491 level, at which point I would be recommending people go ahead and take a position, because, and the reason I say that is because this is expected to overtake Ethereum. Now, Ethereum is also expected to overtake itself and go to 5,000 over the next 3 to 4 months. So if this is supposed to overtake Ethereum, then if it goes below 500 and it goes to 5,000, that's a 10x. That's a 10x asset right there. So keep an eye out on this one. Just because it has a high dollar amount does not mean that it is not capable of 10xing. Injective token. I love this project. I think I'm done with this one though. I'm not gonna leverage more into this one. I've got a great position down here that I started on September 7th. I added to the bag that I started on June 15th. And so I'm super happy with where this is at right now. And I think that we're seeing, like, you can see that little squiggle that I made that day. I said, I think it'll go up and then retest this zone. Well, it went up all right, and it's now retesting that zone. So if you were thinking about getting some injective token, now would be a good time. I don't believe that we will see, but I could be wrong. We might still retest down here, but these two tests here, even this one here, is very, very strong movements. So might have one more dip here where we test maybe the $18, $19 level before we shoot up. But I would actually say we're likely done. And the reason I say that is because if I take this line here and I plop it right, you can see this price at this, where we're at right now, is at this, where the price was showing resistance in the past. Resistance here, support here, support here, support there. Look, another one here. So this has shown resistance and support where we are at right now. So if it dips below, we might test down to this level, 18. But if it maintains this support like it has in the past, then we're done. We'll see this come up and likely move quickly up these rows. Oh, someone's trying to call me while I'm on the call, while I'm doing this. Anyway, so at 24.7, 28.9, 31, these are all major points that I see us reaching here over the next couple weeks. Desync, decentralized storage, specifically for web hosting and also AI hosting. We've seen this pattern just continuing to form. Right now we're at basically the middle of this, basically at the middle of this pennant right now. Still consolidating within this pivot zone between 1930 and 15.6. So back and forth between these 2 points, likely for the rest of this time before the energy just builds up and breaks out one way or the other. That could happen before this center point though. That's quite a ways away in comparison to some of the other assets that we're following and the timing that they break out. This one's saying 52 days. Could very well take that long. But something tells me that we're going to be seeing some major action here at the beginning of November that correlates to the so-called election. 0 by 0, dipping down again, coming back to low prices. I've got a couple positions in this already. I don't think I need another one. Yeah, 0 by 0 I added to this on September 7th. It's down low though again, and it's even where I started. Yeah, it is back to that same position. So we'll be watching this. If this goes down and tests even further, then I will add to this one, because 0 by 0 is a very, very prominent AI project that really highly regards security and privacy. So yeah, if this dips down further, if we can't see this maintain support at the 10-cent level and we start dipping down towards 9, then I will definitely be adding to my position here. Definitely showing a 50% loss. So definitely showing that my timing was a little bit too soon here, but I'm not to be discouraged, because even that first trade that I took at 21 cents is still gonna, even if it just comes up to the all-time high, that's 141% growth. Now this is a longer term project. I don't expect this one to go anywhere anytime soon. It will experience the bubble and the pop, but the values that this company has, I feel, are going to let it weather the storm. And so I'm not too concerned. I think that once we can get a leg up over this resistance here at 22 cents, it's gonna be no problem for us to extend upwards to that all-time high. If it
Could
goes
you go
down
back
lower,
to
I'll be
desync
adding.
for a second?
The which, sorry?
Desync?
Desync, yeah.
Just go back for a second.
Sure.
Wait. That's it? That's good. I'm good.
That's all?
Yep.
Something happened to this there. There we go. 3 protocol is the, they want to go no KYC for you to get a visa. And they are now operating in several countries. And so now is a very good time. It is below that support that I was thinking I would, yeah, it is below that support. Definitely retested the trend line here. This high, very indicative of another movement to beat out. So this is at 21. I think that we're going to see a nice big push to beat out that high there, but then a retracement to retest this level here. 3 protocol. I don't actually have a position, so I'm so leveraged right now. I want to get this ARK. Yeah, I'm going to get ARK, and I'll take a look at 3 maybe next week. If it's still down here, definitely grab it. But yeah, right now it's sitting at 8.7 cents. It is expected, again, this is another one of those ones where it's like expected to be $1. And so we can likely, yeah, and that is friggin' 800 some percent. I can't even see it. I have to move my chart and everything to be able to see how much growth $1 is. So $1 would bring us 10x from where we are right now. Well, yeah, it makes sense. We're under 8 cents. So that is, yeah, that's an exciting project. I just like it when I see things like, hey, you don't have to submit your ID for you to have an account. That's my kind of cup of tea. Here's Link AI, definitely down low. This M formation is promising, but it's still consolidating, still accumulating some volume here in this pivot zone, which is a good sign. If it goes below the white line, we'll reevaluate. I may add some to this one. Again, I got enough AI stuff going on right now. It's just good to know what some of these major players are. DE AI or 01 Labs. There was a partnership between 01 and I can't remember who it was. I'd have to look back at my news over the weekend. I didn't get to organize my news like I normally do. And so yeah, there was a partnership between 01 and another I think it was a storage, like cloud storage. And so this here is showing great strength, as a matter of fact. This, after this all-time high, the retracement didn't even really dip into this pivot zone. It's been even steering clear of that since then. So I believe that we are finding, we have found a good support at the 46 cent level, and likely will extend up to that dollar level very easily. You know, these movements here are just fun. Like if you can grab these are just crazy. 6 bars, so 6 days of price action, 200%. Put in $1,000 and make a quick $1,000 on top of it. FAR, here we are. FAR is still just hovering back and forth. You know what, this, whenever I make a trade and then the price just whiplashes back and forth on that for the rest of time, I just think it's the best trade ever, because it's like, oh, I couldn't possibly have timed it better. That's exactly what I'm experiencing right now. Look at how I started this trade here, and it's just been back and forth, just bouncing up and down from that spot ever since. That tells me I got it at the best price you can imagine. Well, the best price I can imagine would actually be around 23 cents. Right now, it's at 8/10. So I'd be good. I'd be good with this just continuing to follow my plan, which was I'm going to buy here, and I'm going to sell here. 2,300%. TRX. Tron. This one I'm following simply because of how consistent it is. Just beautifully consistent. We talked about this on the trading yesterday, how this is actually logarithmic. So these are straight lines because I'm on a logarithmic scale here. If we were to actually make this a linear scale, these lines would be curved going upwards exponentially. So this is just a great chart. Like, I'm so impressed by it. Just have to follow it. You know, if I see a nice retracement back into this zone here, I'll definitely buy. That'll be great timing. I like to see larger retracements than just touching the. I like to see it coming in and kind of playing around inside there, like I did with FAR. You know, I saw the timing of this, and I was just like, look at how it just fell back in. And this is the zone here, if you're wondering. That's the zone. That's the zone of where the price just bounces around and tons of volume gets accumulated. So I just love it. So TRX, I would like to see it come down and actually test this area here a little bit harder. We just tested it, like bounced off of it. I want to see retracements that actually tell me, yes, it's on sale. Here, this is just a flash sale. I want it to be on sale all the way. Solana. Lots of memes are being launched on Solana right now. And these meme coins are important because what they are is they're basically they're basically identifiers for communities. Do you have the meme? If you don't have the meme token, right? Because that's what these memes are. They're just tokens, NFTs. So you're buying this meme coin, and by having it, by holding that coin, you have the token to be able to converse with inside the community. But they're worth something. And so we can buy those things, and we can benefit. We don't have to join the community, but we can still have a coin. And so Solana, providing a lot of liquidity for those types of projects, is going up in price right now. We're seeing this climb up because of how many more projects are creating meme coins. It's just the trend. And so Solana's price is going up. XRP. My sentiments on this are pretty conservative. I'm not a big fan of this asset simply because of how much it is being tied in with an evil banking cartel's digital ID. But I like to watch it because it's good to know what it's doing and where people are going to be coming on board. And I believe that we are kind of at that shelf right now where we're going to be seeing the price come up and test the upper side of this this trend, this channel. And I think that, yeah, it's nice little, if you wanted to make a little bit of cash here, quick 28%, be a great little practice zone for you to practice buying it and then selling it. Buying it when it goes off of the bottom and selling it when it goes off the top. Find the pattern and just repeat. Modic, good old Polygon, down, way down into the consolidation zone. Again, similar to what we saw with FAR. This is great. Like, we are at the bottom of that zone, just bouncing like a little rubber ball on that. What is this? This is 35 cents with an all-time high of $3. This is really going to help a lot of people and a lot of projects, especially within the video gaming industry. ADA still consolidating here at the upper end of this pivot zone, likely to show a little bit of resistance on this trend line. So we may see one more pullback as it dips back down in towards the 32-cent level before it breaks out. And at the same time, do not be alarmed if we actually go down like we were in August, down all the way to 27 cents. Could very well do that. Could very well retest that, even this trend line here. So watch out for that. I've always got a little bit back and forth. So I've got ADA and Canadian dollars, and I just kind of trade them every once in a while whenever I think, whichever direction I think it's going to go. Right now I'm holding pretty still. If I get some more Canadian funds in some way, shape, or form, I'll just be switching it over to ADA. I'm like I haven't held a balance of more than $500 Canadian for like 4 years, so I'm not about to start. Not about to start. Canada is going down the drain. Just go look at what what was that Bill 293 is all about. Just go, if you don't know what Bill 293 is, you got to go look it up, and you'll see that it is the end of Canada, and it's already gone through the second reading at the Senate and passed. So, you know, Canada doesn't care though. So I don't care about Canada. Anyway, Ethereum. We had the breakout there a couple days ago. It is retesting itself back inside that wedge. I do expect it to stay here for the next couple of days, maybe even retest this bottom trend line before we have the test of this trend line, the bearish trend line that I drew back from, what is that, March? May. So this trend line has got to be beat. And then there's the other trend line from May, March rather. That one there is yet another trend line that has to be broken before we can say that we're in a bearish, or rather in a bullish trend. So you might be bullish, but the price isn't yet, just so you know. Bitcoin, just in case we were wondering whether or not I don't know what I was going to say. Just in case my accurate drawing here is coming to fruition with the beautiful test of this trend line, now dipping back down, likely to retest down here at the $63,000 level. It is not unheard of for it to retest even further though. I mean, a 12% drop in Bitcoin can happen in a matter of hours. And so it is important to note that if it comes down to here, you know, anything that you're holding here will drop by 11%. So you may want to sell and wait to see confirmation of support. We don't have confirmation of support. In fact, we're out here hanging out on a limb, breaking out over top of this trend line. So of course it's going to retrace and needs to find support. Right now, you know, it could be at that. This is a weak support here, but I feel like this $63,000 level, this big purple, this fuchsia line, that's going to provide more support going forward. ADA versus Ethereum, coming back from that dip that it had on October 18th. Oh yeah, that was the day I went to Edmonton. So ever since then, it's been rallying back. A little bit of a pullback today, but I do expect it to recover and even get above this blue line here. And we'll look for it to find the resistance up this trend line. Both of them, actually. Yeah. So there we have it. Market analysis for today, October 23rd. Thank you so much, everybody, for tuning in. Glad to, I'm glad to share what it is that I know and how this day is coming forward. I love watching this day unfold. Talking about it, studying it since 2011, it's been almost painful to watch because it's just like, when is this going to happen already? Well, now it's happening and we're here. So thank you very much for tuning in. I get to chat with you guys and share my knowledge, and it's fun. And that's it. End stream.